All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, especially this morning, I have some issues. Drop me a one in the chat. Let me know that you're with me. You can hear me, and we are all ready to go. Let me know my chat is working. I think I got everything cleared up. Okay, so hey, let's start out with a strong foundation, as we always do in the Forex trade room, meaning that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's center ourselves at body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. Let's always imagine our trade successfully materializing. We want to be sure to always obey our trading strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trades have commenced. All right. So let's jump right into it. We are going to go first. We'll take a look at the dollar index, and we can see that the US dollar edged lower to around 100.9 on Thursday as investors are eyeing US retail sales and producer inflation data due Thursday for fresh insight into consumer demand and inflation trends. The greenback weakened notably against several Asian currencies, particularly the South Korean won, amid speculation that Washington is advocating for a weaker dollar. As a part of ongoing trade negotiations, the Trump administration has argued that the relative strength of the dollar and the weakness of regional currencies has disadvantaged U.S. exporters. The dollar's recent rally, fueled by optimism over U.S.-China tariff reductions, has also begun to fade as market focus shifts back to broader economic implications of U.S. trade policy. All right, so we keep just fits and starts, right? All the back and forth, right? Which is why we start settling in and really targeting those 80/20s, right? Those shorter term moves in comparison to those ABC waves and things like that. Those C to D moves. So what else? Oh, so going over the Forex Factor Day Thursday. So talking about retail sales, core PPI, unemployment claims as well for the United States at 8:30. So you see a lot of red folders there, right? Very, very important today. 8:40, we also have Chairman Powell speaking, and then we've got the Empire State Manufacturing Index and the Philly Fed Manufacturing Index. So this is actually a pretty busy Thursday. Pretty busy Thursday. We've got some Canadian data there, housing starts, manufacturing sales, wholesale sales. So this is we got a lot going on here for the 15th. You've got 10:30 natural gas storage. It's a loaded day today. Another FOMC member Barr speaking. So hey, let's see what the day brings us. Back over to trading economics. Hey, UK GDP, one of the key fundamentals that we track, growth above expectations, right? So the British economy expanded 0.7% on the quarter in Q1 2025 compared to 0.1% in Q4 and forecast of 0.6, so slightly higher. Preliminary figures showed it is the strongest growth rate in 3 quarters, with the largest contribution coming from the services sector, gross fixed capital formation, and net trade. Year on year, the GDP expanded 1.3%. So good for the UK. Here, the expectation from trading economics is for U.S. producer prices are expected to rebound in April, right? So just as a reminder, right? Why is this important, right? Easy, right? You can just come to trade to the Forex Factory, click on the folder, and it'll tell you, right? Okay. Change in the price of finished goods and services sold by producers, excluding food and energy, right? Those are volatile. Okay. So that's why this is what that is, right? Your core PPI. So actual greater than forecast is good for the currency, core retail sales, okay, primary gauge of consumer spending, which accounts for the majority of overall economic activity. right? So we got that there. All right, all right, all right. Okay. Had a question. Somebody's hand was up. Let me see who that was. Um, Yasina, you had a question? No? Maybe it's an accident. All right. So let's keep it right on rolling. So, article in Bloomberg that I saw this morning. Trump's tax cut plan will cost trillions more watchdog fines, right? So the cost of the Republican lawmakers' draft plan for sweeping tax cuts is estimated to be 3.8 trillion over the next 10 years, but independent analysis believe the reality is likely much higher due to the use of budget and political tools, right? So the administration is saying 3.8 trillion, but I seen in here it could be more like 5.2 trillion. Again, right? Something that we're keeping a very close attention to. All good. You see that for sure. Um, so that's where we are. Of course, we're paying close attention to that as you know. This is gonna be a big deal, right? Let me see. So let's see. It could raise concerns about among investors and economists about the scale of future borrowing needs for the government, whose debt load is on track to surpass 118% of the economy's size by 2035, potentially undermining confidence in securities. We will continue to follow the news on this, right? Moving over to the spider, okay? Again, right? A lot of back and forth, right? So we saw the little boost with the U.S. with what the market saw as some positive news with U.S.-China relations, but you can see, a lot of sectors, S&P was right back down, uh, finishing out the day yesterday. So taking a look at the DXY, right? So on this 4-hour chart, look how we have pushed higher. We corrected. So even on the DXY, even though we don't trade it, right? We just followed the chart to dollar strength. You can see how it pushed up in this zone and it has turned over, right? So the question is, will we continue to move lower, right? So even the DXY formed an 80-20 and pushed up. We came right into the 68, 61.8 zone, hit that daily resistance. That's why we have it marked in red. That's a daily level. And we turned over. If we go to the daily chart, we can see where explosive move on the dollar, right? But then look at the decline. Okay, look at the decline. So the question is, right, is this going to stay around this level and create a higher low, or are we gonna take this level out, this zone, and get back below 100, get back below 100 for the DXY? So that's the question, right? But right now, right, when you look at it on a daily basis, look at how we finished, right? We finished down. Okay, we finished down. So that's where we are on the dollar. So let's jump into some of these pairs that we've been following. If you move over to our Aussie CAD, right? We can see how from a daily level, okay, we can see how we've pushed up, right? We've retraced 86%. Okay, we've retraced 86%. And now we're kind of looking to try to form a high here. All right, so let's see how it goes. We know on the 4-hour that we spotted at 80-20. You can see how it's turned over in the zone and it is now moving down. It is now moving down. So off the high, okay, down 78 pips already off the high on this 4-hour 80-20 on the Aussie cat. Okay. All right. So that's where we are on the Aussie cat 4-hour 80-20 turning right over, right? So we want to look for if you're looking to play this, we want to look for pullbacks and continuations down, right? pullbacks and continuations down. That's what we're looking for on this. So let me we made the climb higher. And if you're playing at 80-20 on the 4-hour, I think I just took that level out. Hey, sure we got the right levels in here. Down to your 1-hour chart. And you're looking to play this short. And what you're going to do, right? This is a previous 80-20. Plan it off to 4. And you want to drop down to your 1-hour or your like a 15-minute chart. Then you can say, you know what? I'm going to continue to look for lower lows and lower highs, right? All right, so we're going to this lowest point here, like so. And if you want to play this, say on the 15, right? We know that that's coming out of a 4-hour zone there. And the trend line didn't carry through to the lower time frame. There we go. Like that. And we know this is the 4-hour 80-20 TP1. This is our 4-hour TP2. Okay, like so. And we want to see if we can continue to get pullbacks and continuations down to our higher time frame targets, like so. Okay. So this one is about to finish out. Okay. So this is going to be, right, our ABCD wave. A, B, C, D. Once we hit that D extension, right, based on that pullback, 61.8 pullback, we didn't get quite to a 786, so our target is going to be here. All right. So on the 15-minute chart, if you saw in your higher time frame, you're playing this is a 4-hour 80-20. And he said, you know what? I want to enter that trade, right? I want to enter that trade by dropping down to a lower time frame, say the 15-minute, right? Maybe that's your chart. Then you could drop down, wait for the trend line break, wait for the pullbacks to your level, right? So this one pulled back to my level. Okay, so now we're starting, right, that ABCD cycle. A, B, C, right? D, right? Eventually, right? A, B, and we'll be looking for that C, D, right? So we'll be looking, once that D extension is hit, wherever it settles down and forms that first low, right? We'll be looking, our C becomes our new A, our D eventually become our new B somewhere, and then we'll be looking for that C, right? That C somewhere, right? Bang. Then we'll be looking for a continuation. And that's the game. Now, you can use the shorter term targets. Like, so for example, display here. Okay. All types of opportunity, right? The move within the move, right? We know this is a 4-hour 80-20 moving down, but you could play this like this here, right? Right? So put my rules around the 61.8 zone, right? Set my TP.
Hey, Benny.
Hey, how are you?
Good. I was looking at this chart last night and I started laughing and I remember your energy trampoline lesson.
Yep.
And I'm like, did it hit the seven? Did it hit this? Did it hit that? Where it's gonna go next?
Indeed, right? That's it. It's those energy trampolines, right? It's those fib levels. That's right. That's right. So you be on it, man. On it, remembering all those lessons. That's awesome because that's what it is, right? Look at it bouncing around, right? Form gave us a crown type of setup here. We
I was
took out the
hard
low,
headed.
pulled back.
I
What'd you
was
say?
I was hard headed. I was like, energy trampolines? What are you talking about? I couldn't see it at first. And then, oh, that's how I got caught up in that train because I was that I got caught up in that trade and lost because I wasn't paying attention which way price was bouncing.
Yeah, 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 yeah. It's all good. It's all good, man. We stay in it so we can learn those lessons, and then we remember and we move forward. That's it. Always learning something in this game for sure. So this move right here, right? You had a risk, right? About up a little higher, about 17, right? And we got to 52 on that, right? So we're on the 15-minute time frame. So the beautiful thing, and again, why we play those fib levels and why we like 61.8s and higher is because not just because it's magic and all of this stuff for the 61.8 and the golden zone is it puts us, it's always putting us in the proper risk to reward ratio, right? So that's a 3-to-1 risk to reward. If I'm risking 17, right? Dollars to make, you know, to make $52, right? That's a 3-to-1 or a 1-to-3 risk to reward, right? So for every dollar I'm risking, I'm making three on it. Okay. So what does that mean, right? That means that with a 30, if I'm constantly in those 3-to-1s, if I've got a 30% strike rate, I'm still making money. I'm still making money if I let my trades play out, right? Okay. Let those that go to the stop hit the stop. Let those that go to the take profit go to the take profit. And if you win 30% of your trades, you're gonna make money at 3-to-1. That's why that stuff is important, right? Can't say that enough. Right? To put yourself in the proper position and be disciplined to your zones, right? So this one's about to finish out. Okay, that one was a good move there. On the 3-to-1. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. Good morning, everybody. How about yourself, man?
Man, crazy, crazy busy. I did get
I
in
know
late
it.
last night. Baseball, uh, cheerleading, getting ready for national competitions here in the next month or so. Just all over the place, man. So it's been some early mornings and some late nights, man. But I'm here and I'm blessed. Yep. What's on your mind,
Man,
man?
we appreciate you, dude. Not too much this morning, bro. Just looking to see what the day looks like today. And then watching the fallout of things that happen as Donald Trump makes his way through the Middle East and impacts on oil there. But that's really it for me.
Yeah, yeah, man. Yeah, man. It's like they're just doing too much all at once.
All at once.
Just doing this, and it's just organized, intentional chaos, man.
Hmm.
Just chaos, and it's intentional. So yeah, I agree with you, man. Continue to watch those things unfold. So that's it, man. I was telling them earlier that we've got a busy day today on the on the fundamental front, you got retail sales, PPI,
Yep.
unemployment claims, manufacturing index, Powell speaking, another FOMC member is speaking today as well at 2 o'clock. Like, so it's gonna be busy day in the markets. And you see how we ended up, right? It seems like that rally kind of starting to fizz out already,
Hmm.
so short-lived. So continuing to track those 80/20s.
Exactly, man. And let's see what that PPI data looks like um, later on. That's what I want to see.
Yeah, for sure. So we'll see this. It is coming. It'll be here quickly. Right? Everything starts when today, 8:30. So 8:15 actually with Canada. So we'll see how it goes.
Yes,
All righty.
sir.
So continuing on, right? 80/20. Ozzy Swissy hit target one. Right? We'll see if it can make its way. Looking kind of bearish right now, but we'll see if it wants to stay in this zone and push higher. We'll see if it wants to stay there and hold up, but I don't know. We'll see. VIX is 1906 right now, so below 20. Below 20. So we'll see what happens on that, right? So definitely not necessarily risk off right now, right? So let's see how that plays out. This Aussie yen has climbed. Look at that. And now we're turning over in the zone. Okay, so again, that long-term bearish case uh, for the Aussie, we'll see how that plays out over the long term. But you can see we've hit a key level and we're starting to turn over now off the highs. So we rallied, okay, and look how we held, right? Look how we held. So we will see. We will see. There was that range that we were caught in between and we broke. So we'll see if we continue to move back in the range, we get below that 93.54, we may continue to head down. But right now, right, this is it's looking pretty bearish in the short term. So let's see. Yeah, moving down, moving down. Right. So we'll continue to see what happens, right? See if we get a pullback, right, and continue to move lower on this Aussie pair, right? So if you're looking for that to continue to move, so this was the swing we were looking at last week, and at 1.618 that was hit, okay? So we could take that out now. All right, so this ABCD wave here was complete, right? Let's see it? A to B, C to D. Now we got a new AB boundary. We're turning over, pushing down into the zone, okay? So the reason why we flipped that fib is because you had a major rally that took out our fibs that were coming to the downside. But if you're thinking, I'd like for this to continue bearish, right? And you're looking at in the short term and you're saying, you know what? I want to just follow the market flow. Where are we going now? Then you do the same thing, right? Pull all this out, okay? You're saying to yourself, like, what is it doing right now? We're correcting, we're moving down, right? And you're looking at the same situation, right? So move it down, back down to the 15. We draw that trend line. And so we have, right, the reversal. Aggressive break off the highs, right? Look something like this, like that. You got your inner outer long-term trend line. Tracking down. It's an 80-20 right there that would have failed. Now we're right back in the 80-20 zone on the 15. And we're up against this 93.54. So being that price, 20 zone, looking at this 15-minute chart, you got a couple options, right? Short term, we know that's our sweet spot. Pull this, I'm gonna pull this trend line out. You see it. Okay. So you're looking at this now like, okay, it's one or two spots that I like to kind of trend. This is our primary zone here, the 80-20. So now the game is simple. If the 15-minute chart is my chart, I've got opportunity. All right. We know at least short term right now, like this is moving bearish. Higher time frame, we've hit a key zone. 4 hour, we're turning over, formed a high. This is moving down right now, right? So I've got a couple opportunities. Do I want to take a shot at playing an 80-20 on the counter move, at least back to the 382? These are my choices. You don't have to make it anything more than this, right? You got three choices. Stay out, right? Play the counter trend move. Or if your directional bias remains short, then you wait for a high price in the zone to get short. Make sense? Yes, no?
Yes.
Okay. Right. Very simple. Stay out, counter trend, because it's in our zone, or wait for a high price to play it short. That's it. Those are the options every time. Right? When in doubt, stay out. Okay. So we're in the 80-20 zone. Now, other decisions you have to make. How do I want to enter? Right? Do I want to enter and trade just off the zone? Okay. See, I've got my 1% risk or whatever. Hey, 1% risk, I got to lose 100 trades in a row, right? I have to lose 100 trades in a row to blow my account if you stay in discipline, right? But we see people blowing the account in a week, right? Over trading. So now over leveraging. So I can play this 80-20, like so. And do I just want to trade off the zone? It's in the zone. And maybe you make up your trade rules and say, you know what? If I just trade off the zone without, any real further additional confirmation, then maybe I only trade that at a 0.5%, 1/4%, right? But if we look left here, past resistance, possibly becoming future support, okay? Or do I look for additional confirmation before entering, right? So, okay, I've got the zone. I've got past resistance becoming future support. Maybe I want to trade the trend line break. Maybe I say I need some additional confirmation, right? To enter that trade. Again, a lot of this comes down to lifestyle. Do you have the ability to be on your charts, right? Or able to set some sort of alert for when price breaks that trend line. Right? So, okay, when this price moves up, and breaks the trend line, okay, boom. And next decision I have to make is, okay, I got a trend line break. Do I want to aggressively get in? So say I get a say like a bullish engulfing candle, we close bullish. Do I want to get in aggressively off of that? Or do I say, okay, Not only do I want to say it hit my zone, I've got past resistance becoming future support, but do I want to see this trade take off and then pull back? Right? Play it like this, right? Follow me closely now, right? These are decisions that we have to make. We can't make these decisions for you, right? You have to make them for yourself. So do I need that additional confirmation with a trend line break and then a pullback, right? A pullback to a level, because then I'm playing the same game, right? It doesn't change. Because then at that point, see how I've got this stop way down here, right? So if I'm just trading the zone, I can put my stop here, okay, at the extension, because if it doesn't hit the extension, I expect it to go higher and correct. And that's what we're trading. But if I wait for all these additional confirmations and I wait for the market to form a high and then pull back, then look what it becomes, right? It just becomes the same old ABCD wave game, right? Where I then could put my stop below the A, wait for the pullback, okay? And even then, right, I may say, once it gets to my zone, okay, then I want to see a break. I want to see a trend line break off of my fib level. Boom. Okay. So now I'm not entering just off the zone. I'm waiting for, I want to see the market reverse off that level and pull back. I want to see it reverse, break my original trend line, then pull back. Because what does this pullback represent, everybody? This pullback is going to represent what? A higher low, right? See, here's a low. At this point, this would be a higher low. So when you hear people say, is the market making higher highs and higher lows? That's it. Okay. So I'm in a zone. I've got past resistance becoming future support. I want to see this reverse out of my zone, break the trend line. Then I want to see a pullback, right? I want to see a pullback to see if it's real, see if it holds. Then I can move my stop up below that A. And if it doesn't take out the A, it has no choice but to go my way, right? And then we're moving towards that target. Those are the decisions that you have to make, right? So we can get you there, right? And then at this point, you can say, you know, when I'm here, where's my stochastic? Is it in the buy zone? So now I'm grading my trade. We've got all types of checks, right? Laying out. Right? So this part, right, you all have to make decisions on. If you have a super busy lifestyle, then you may just be trading zones, right? Or hey, what's my mother chart? My favorite chart. It's the 15-minute. Okay, well, I see an 80-20. I'm gonna drop in, right? I'm gonna drop my order in, put my stop at the extension, and let it run. If I've got more time or I like additional confirmation, right? Set some alerts, whatever, for certain things to happen, then you take the trade. That all comes down to you as a trader, your lifestyle, your trade psychology. Some people need a lot of additional confirmations to put their money on the line and take a trade, right? Put their money on the line and take a trade, right? Me, myself, oftentimes, I'm gonna put a 0.5%, 1%, and I'm just gonna, when it hits my zone, especially if I click on the charts and I'm in my zone and it's stalling, right? I'm getting that sideways movement, or I formed a low in my zone here, my 80-20 zone. Then I'm gonna put a position on, right? It's gonna be a smaller position, and then I'm gonna let it run. It's gonna be a smaller position. I'm gonna let it run, and then, right? So I can always just put in a small position here, save 0.5%. Boom. Okay. Leave my stop wide, because even here, if I enter at the 80-20, right, it's still, for a counter trend trade, it's still giving me a favorable risk. So 34, right, to almost 60, right? So almost a 2-to-1. And then TP2, we move to 80, right? So my counter trend trades aren't going to give me like 3-to-1 or whatever, but it's a zone with a high probability where the price could reverse, right? So higher percentage play, I'll take a little bit, less of a risk to reward, right, on that. But my strike rate is a higher percentage. Okay. So I can always put in 0.5% here, and then I can even watch the trade reverse. And then if I get that trend line break and a pullback, I can add in another 0.5%. Right? And so I can compound the trade. Right? So things to think about. Okay. These setups give you a lot. They give you a lot. Right. So and this is on a 15-minute. We just did all this on a 15-minute chart. Okay. Off of a price reversal and a counter trend trade move. And think about that. This is a counter trend trade move. If I'm trading with this trend, right, we're starting to turn over a bit here, right? So if this continues bearish, and you're saying, Vinny, I've got a bearish outlook on this. Okay, you pass on this, and if the 15-minute chart is your chart, you're saying my bias is to the downside, then all you're doing is you're letting this play out. And when it hits your sell zone, you're gonna sell. And if it continues to make ABCD waves to the downside at that point, then you're in the money. Right? That's it. Like I would not complicate things. I would try your best to form your directional bias. Hey, I don't like this Aussie, right? We know that it's the VIX is back below, 19. Look at your fundamental, back below 20, look at your fundamentals. Hey, I got a bearish outlook on this pair. I think this is going to continue to move down. I don't want to counter trend trade. Okay. Then find your favorite chart. If it's a 15-minute, wait for a high price and then short it. Put your stop above the A and then short it. You're not going to see anything different from us in this group. You're not going to see anything different, because we know that the market moves in waves. Right? Just like on this previous one here, right? Where we did not get a pullback off the B boundary to at least a 382. So if I would have just put in 0.5% at the 80-20 zone here, I'd have got stopped out. So if I put in 0.5% in this 80-20 zone, right, and I just trade the zone and it fails and it hits the stop, somebody tell me, how much did I lose? 0.5%, right? 0.5%. That's it. I knew that risk before I even took the trade. Okay, it's lost. On to the next one. Did it hit the 200 on the weekly? Yeah. Was the
I can't remember which ones because I redid my Aussies last night, and a few of them
okay.
on the weekly. I mean, it was on
Yeah.
200 touch up underneath, and I'm like, okay, I can
Hmm.
see it technically.
Yeah, yeah, yeah. So it's in some it is it's getting it's made a nice run. And it's just it's so back and forth right now. That it's hard to tell. That's why those 80-20s are good plays. Because you could just boom, let me take it to target one, possibly target two. And the market hey, if it's going to continue to range and do all types of crazy stuff, I'm out. So thanks for letting us know that. But that's the Aussie yen, right? This Aussie NZD. So we were wondering if it was going to come back to this level on Saturday, right? It said maybe we get a double top at this level. Well, we're at that level, right? So this was the original play, playing it bearish. So now we come back into the zone. We pushed a little bit higher, but we broke back below it. So what you could do, if you're in this position at all, I got stopped out because I moved my stop down, right? And then it reversed. But you know, this right here, you just sit and you just wait to see what it wants to do. Right? There are times where you just don't know. And that's why we say when in doubt, stay out. You just don't know. So this one, I moved my stop down because I'm thinking, hey, if we break through 165.02, we're headed to the target. It didn't. So move your stop down from above the A, right? And then it reversed, took me out. But I was able to make profit, right? So it didn't get all the way to my target, but I was able to make profit. So we'll see if this gives us a another opportunity, if it'll turn over, but we just don't know yet. Your whole long, is this on the Aussie and ZD?
Yep, it's a golden
Yeah.
cross on the 4.
Okay. Yeah. So let's see what happens. Let's see what happens. Let's see what happens. Good job, Joy. Drop some sevens in the chat. Yeah. So you're still holding that one. Been holding that one for a bit. It's a good move spot, that reversal off the daily, right? So many ways to skin a cat, right? So taking a look at this Aussie dollar. Right? Trying to figure itself out. Right? It's trying to figure itself out. But it's in the 80-20 zone, it's ranging, right? See how it starts moving sideways, strong move up, then it starts moving sideways on us. Okay. So that's where we are there. Moving down, I want to take a look at the Euro GBP. And so this has just continued to run, right? Good data coming out of the UK, GDP data. We may continue to see this move to the downside. Right? 80-20 here, 80-20 here. You can continue to see this make lower lows and lower highs, right? We're definitely overbought. We continue to see that move down. It's quite a move for the Euro GBP. Right? Here we are on the one. Didn't quite reach that 118 zone, right? So making lower lows, right? See if we can make a lower high on that on the Euro GBP. My Euro Aussie, my 4 hour, I got beat on that one. I got beat planted off the 4, but it's since come back and it's broken the trend line. So deeper correction, I still like it long, right? So I got hit on that. But I mean, I'm looking at this 4 hour, and we're still kind of hanging in there, right? So we didn't get it to hold up at 173.89, but you know, we're starting to form a new low. So we just got a deeper retracement. So our time frame controls the lower time frame, right? So we got a deeper correction right down to 786 level. And now we're trying to put in a low. And our stochastic is in a buy zone. So even though this one missed, I got stopped out. We may see this start to carry. So I'm gonna pull this one out. All right.
If you want to say about the high, bro, you got an 80-20 on that.
That's 80-20 on the 4. All right. Yeah, and it's coming out of there too. Let me get these ones off of here, right? Right. So you guys see, like it doesn't. So you can see here, like -420, -240, right? What does that represent as a percentage, right? So some people are like, oh, he lost 420 pips, 240 pips, but that's only going to come out to 1%. 0.5% total, 1% total, right? So if I'm taking a 0.5% at the 61.8, 0.5% at the 786, right? I'm out of 1%. It's the magic is in the math, right? So, all right. So again, you, you let the market take a finger, but you don't lose your whole hand, right? You just don't. So oftentimes our greed gets the best of us. Right? This is the one. You never know what's going to be, which one is going to be the one. Don't. I don't care how many indicators people try to sell you. They're all lagging anyway. Right? So what Ryan is saying here, I don't know why it does that sometimes. Anyway, I think I hit delete all. Maybe that's the reason. But right, he's spotting at 80-20. Right. So when you look at it from the daily, okay, now we're trying to put in this low, right? Still above our 200. Okay. And this is an 80-20. Drop Ryan some sevens in the chat for spotting that. Right. Sevens in the chat. And so now we're in the zone. So you say, okay, I could take this 4-hour level. All right, this is what we were doing last week. And I could go to any time frame. And I can say, okay, I've got a 4-hour 80-20. So I know I at least want to take that to the 382. $61.8 target. So if I come down to my one and track it, I can do that. These are 4-hour 80-20 targets. Okay. We've got a trend line break. So now, 236, very aggressive move. So now I'm waiting on my new high to form. So we know our C is our lowest point within our AB boundary, right? We had a de-extension that was hit. We don't have a new fib yet. Why? Because we don't have an official swing high. So say this is going to be our swing high, right? We don't know yet. But our C becomes our new A. Our D, wherever it settles, possibly here, is going to become our new B. Now, right, we can look to see if price wants to pull back to our zone. Right? And we can enter this trade off the pullback, take it all the way to this target, 178.37. Or I can say, you know what? I only want to play it to here. There. Like that. And you can say, I'm going to play these 1-hour fibs. The 4-hour 80-20 help me determine my short-term direction, which is bullish. Now I'm going to play it because what do I have? Well, off that pullback, if we pull back, I've got a total of 456 pips of buying potential. How I divide that up or how I play that is totally up to me and my game plan, right? So if it pulls back here, I say, you know what? I'll take 200 pips, right? If it pulls back, right? Say, okay, perfect scenario, right? Okay, I'll take however many pips that is, 263, right? But I know I've got over 400 pips of buying potential. Or, okay, I enter, okay, and I continue to scale into my trade as we head towards this 4 hour. $38.2. So you can do that. And you can drop down to any time frame and do this, right? Because here, it's out. This is the 5 minute. Here's the 4 hour 382. Way up there. We can clearly see where price has reversed. All right. Then a chart, get in more aggressively, right? So something like this. This is our lowest low here before the trend reversed. Like so. Right? So this is running. This is probably going to run to our extension, right? But once we get to the extension, if that's what it wants to do, right? Because we barely came at the 382, looks like maybe didn't even get there. But say this carries up. This is a 5 minute chart, right? Same concept, 5 minute chart. We hit that the extension. Guess what? If this is our lowest point within the AB boundary, C becomes our new A, our D becomes our new B, and then we look to continue. Right? And we're going to look to continue all the way up this 4 hour, 38.2. Any questions over anything that we covered today?
No, sir.
All right, Ryan, anything before we wrap up?
Great session, bro. No, sir.
I appreciate it. Everybody, enjoy the rest of your day. Remember, busy, busy day on the calendar, right? So we should see some type of movement in the market, especially for our traders who like to trade on a lower time frames, right? Anytime you see a day full of red folders like that, not just it's important not just to see, hey, it's a red folder, but to know why it's red, right? Always remember that as well. With that being said, hey, everybody, always remember, don't just count your pips, but indeed count your blessings. Have a great day.